Effectively, Moonpig is dominant in online personalized cards in the UK and the Netherlands. It benefits from a long structural growth story where the vast majority of people still buy their cards offline but are moving online, and it's been a slower category to move over the last compared to other categories, but it is still moving, and Moonpig is by far and away the winner as that takes place. Because it's listed in the UK, it's deeply unloved, and so it's trading at a very low multiple of its free cash flow and earnings. And the beauty of its business model is because it's so capital light, it can return 100% of its free cash flow back to us each year and still grow, such that today we're getting over 10% of the market cap back in buybacks and dividends. So that's really the entire investment case in 30 seconds. But what I thought I'd do is over the next 15 to 20 minutes or so is take you through the sort of core tenets of that investment case. So we're going to start with looking at the quality of the business, then we're going to move on to the growth prospects, and then finally we'll look at valuation. So with that, let's dive straight in, looking at the quality first. So as I said, the company is dominant in the two markets that it primarily operates in. So in the United Kingdom, which is a card-loving country, it is the highest card giving per capita of anywhere in the world. And Moonpig has a 70% online market share, which is 4 times larger than the next largest. So completely dominant in the UK. And then again, with Greets in the Netherlands, it has a 65% market share and almost 4 times larger than the next largest as well. So in the two core markets, completely dominant. Then it has a third leg, which is the US, Australia and Ireland, which is a small portion of the revenue, but growing nicely. So these are the core core markets. The beauty of the business is although it has these different brands, it's effectively one technology platform. Then if we look at the bottom right, you can see the great opportunity is there in the bold. So it's got 12 million customers today, habitual recurring customers that come year after year. But the market, there are 51 million adults that buy cards in the UK and Netherlands. And the vast majority of them have never bought online. And as they do move, for two reasons: one, because younger card givers are much more likely to choose online. So as they get older, they enter the potential market for Moonpig. But also, as the older audience become more comfortable with online, they too start to test the Moonpig brand. And the beauty for Moonpig is they have zero presence offline, but online they're 70%. So as it shifts that way, they have already effectively won that new customer. And then the other addressable market that they've moved into has been gifting. And as you can see here in the bottom left, the gifting market is much, much bigger than the card market. And this has greatly increased the TAM for the total addressable market for Moonpig. And then let's have a look at the moat. So in theory, it's very easy. As I said, Moonpig's business is very simple. It's effectively just an app where you design your card and you design your card, and then the company prints the card and sends it to a customer or to the desired recipient. And that is clearly not something that's particularly difficult to do. You and I could start an app and print it. So why does it have a moat? And the answer really is on this page. It's built around data and habit, but there are 6 key sort of moats that the company has, and they are widening over time. And the first is switching costs. So the company has over 100 million saved reminders on its database. And this means as your sister's birthday is coming up or as Mother's Day is coming up, Moonpig is ready to alert you, and that then leads you to go straight onto its platform and not even check for a competitive product. And it's an incredibly powerful part of the business and creates habitual behavior and recurring revenue. The second point is brand power. So Moonpig in the UK is practically a verb, and the moonpig.com jingle is known by almost every single adult. And that's not true of Funky Pigeon and Papier and its other competitors. So it has an enormous head start. and it means that it doesn't have to spend anything like the amount on marketing as its peers, at just 8% of revenue. And this leads to higher growth because its brand means that as people move online, they move to Moonpig, but also it means better economics. And then third, recurring demand.